All right, welcome to this explainer. Today, we're unpacking a massive, high-stakes ecosystem, the foreign exchange market. It's literally the invisible machinery running our entire global economy, and we're going to break down exactly how it functions.
Before we get into the weeds, just think about how everyday actions actually happen on a global scale. Like, how are things like traveling abroad, buying imported goods, or multinational payrolls actually funded? How does a company in the US seamlessly purchase materials from a manufacturer in Japan? Well, the answer to that question is the very foundation of global finance.
Here is our roadmap for today. We'll be looking at 1. What is foreign exchange? 2. How currency pairs work. 3. The 24-hour global market. 4. The top currencies in forex. And 5. Forex trading platforms.
So let's jump right into Section 1. What is foreign exchange? The global financial backbone.
Now, Forex isn't just about swapping a few bills at an airport kiosk, right? It is the absolute bedrock of global economic activity. Without this massive system of buying and selling national currencies, international trade and investment would just freeze.
The sheer scale here is honestly staggering. We're talking about the largest financial market on Earth, and it's driven by four main pillars. First, it's a completely global marketplace connecting major financial centers. Second, it runs 24 hours a day. Third, it boasts massive liquidity, meaning you can almost always execute a trade instantly. And fourth, currencies are always traded in pairs.
So, who's actually pushing all this money around? Well, it's a totally decentralized system, so there's no single exchange building calling the shots. Participants range from massive governments and central banks doing the heavy lifting, to huge corporations converting international payments, all the way down to individual retail traders looking to profit from price movements. It's just a deeply interconnected ecosystem.
Moving right along to Section 2, how currency pairs work, the mechanics of the trade.
Okay, so the fundamental rule you've got to grasp here is that in this decentralized system, you can never just trade one currency in isolation. You can't just go out and buy euros without giving something up in return. In Forex, everything is relative.
Basically, every single transaction is a simultaneous double action. You are always buying on one side while selling on the other. Say you're betting the euro will strengthen against the US dollar. Well, you're buying euros and dumping dollars at the exact same millisecond. It's a constant global balancing act.
Take the major heavyweights, for instance. The euro, British pound, Japanese yen, or Australian dollar, all paired up against the US dollar. And you know, these aren't just static numbers on a screen. They're more like vital signs. They pulse second by second, driven by shifting supply and demand, geopolitical shockwaves, and breaking economic news. Traders are constantly analyzing these inputs to predict exactly where that balance of power is going to shift next. Next up is Section 3, the 24-hour global market, a market that never sleeps.
And it really doesn't sleep. This market literally follows the sun. The trading day kicks off with a Pacific session down in Sydney. Then, as Australia winds down, they pass the baton over to Tokyo. After that, Europe wakes up, with London driving the highest trading volume of the day. And finally, New York logs on, injecting a massive surge of North American momentum. That continuous overlap is exactly why the market is always on.
Let's dive into Section 4, top currencies in Forex, the heavyweights of global trade.
You know, it's fascinating because each currency really operates with its own distinct personality. The US dollar sits right at the top as the world's primary reserve currency. Meanwhile, the Japanese yen acts as the ultimate safe haven, meaning investors aggressively flock to it whenever global markets start to panic. On the flip side, the Australian dollar's fate is heavily tied to the boom and bust of global commodity trades. Recognizing these underlying characteristics is exactly how smart traders navigate volatile environments.
And finally, Section 5, Forex trading platforms, where the trades actually happen.
So, to actually step into this arena, traders rely on heavily regulated broker platforms. You've got options like IC markets, which are built for pros requiring ultra-low spreads and lightning-fast execution. Then there's FX Pro, which balances those tight spreads with strict regulatory oversight. And AvaTrade really stands out for its predictable pricing and robust educational support for anyone still mastering the software. Basically, all of these plug you straight into that 24-hour global liquidity.
Now, if all this mechanics breakdown has you itching to explore the tactical side of trading, our source material points to resources like foreignexchange.live.
They offer a highly practical, step-by-step roadmap for anyone ready to safely navigate the actual execution of these trades and start putting these concepts into practice.
We've really just scratched the surface of the machinery running our global economy today. You now know exactly how the world trades its money, overlapping in pairs across continents every single hour of the day. So I'll leave you with this. The next time a major geopolitical headline breaks, or a central bank suddenly changes policy, will you just passively read the news, or will you know exactly how to read the resulting shifts in the world's largest financial market?